morning, everybody. Welcome to the game plan. We've action-packed. I'm pumped today, guys, because we have the Federal Reserve later. We just got ADP private sector jobs numbers at 8:15 a.m. At 10 o'clock, we got the JOLTS numbers. We've got earnings from SMCI, AMD, Starbucks, all getting crushed here this morning. And you know what this does for me? It gives me opportunity. And opportunity comes when you wait and are patient. So we're going to get right started here on the day. Let's take a quick shot to Lawton right there. Good job, man. Right over here we go. Let's jump into the action, right? So first and foremost, we're going to go here to the market blast. I did do a market blast this morning because I want to cover the key data points that have come out. So down we scroll here. And by the way, all of this information is available on our website, posted even before I do this game plan, and then I go into in-depth analysis. So number one, ADP private sector numbers came in at 192,000. That is stronger than expected. So again, that's a positive number. Now, whether or not it carries over to the jobs number on Friday, the non-farm payrolls, we're going to find out. Expectations were for 183, so it wasn't a massive beat, but it was a beat nonetheless. Semiconductors are on fire in terms of going down like a ship. All right, we have semiconductors like Supermicro Computer missed revenue numbers. Now, they actually beat earnings and raised guidance, and some people are scratching their heads saying, well, why on earth did these stocks, or why did this stock collapse when they raised guidance? The answer is very simple. When you have a company that goes up hundreds of percentage points on the year, on this year alone, and hey, we're only May 1st. By the way, welcome to May 1st today. But you don't have any error or potential. Like, you cannot slip up on any number to justify the lofty stock price. And so that's what happened. They missed on earnings. And the problem too is that if you miss on earnings, but then you're like, oh, but don't worry, next quarter we're going to do great, our revenue, we're going to raise our guidance. It kind of builds a mistrust, right? I mean, if you miss on earnings, but then you're like, oh, but don't worry, we'll show you the real stuff in a couple months, it just makes investors feel iffy. Like, really? Are they really serious? Or are they just raising expectations to try to cushion the drop in the stock today, which is down about 10%? All right, Advanced Micro Devices, they honestly had a good quarter, but the stock has been so vertical that it's just hard to justify unless they come out with something even better. So they raised their numbers on their chips, expectations for revenue, but it wasn't enough for Wall Street. And this is the thing. I talked about this and I warned you guys for so long, and congratulations if you heeded some of these warnings, that these AI plays were getting too lofty and that they were going to come in at some point, and now we are seeing that come in. Starbucks. Now, this one's a big one for me. Usually, Starbucks isn't a big mover on earnings. This is down 10% plus on the day. You don't see that very often, folks, down 10% on the day. The kicker here is they really had horrendous numbers. And I was thinking about this, and I said to myself, Starbucks. So I know people that literally will get their Starbucks and avoid even eating. Like Starbucks is number one. And if you're seeing Starbucks starting to struggle, what does that tell you about the underlying economy? Well, for me at least, it tells me that the consumer may be struggling. Now, is this partially due to China? Yes, it is. But there's an underlying element here that there is a little bit of a stall out in the consumer. And we've seen this from other big names as well. There are other names that are struggling. We're going to talk about a few of those in just a minute. Pinterest was one of the positives here. Pinterest rocketing on earnings here. That stock, again, if you looked at that, compared it to Meta. Meta was vertical. It was like this, right? Vertical straight to the upside. Pinterest was like this. It was kind of down. It was maybe off the lows a little bit. Huge difference in what expectations were, because one stock was at a crazy valuation up here and Pinterest was down here. Lower expectations. They were able to beat those expectations. The stock went up beautifully. If you watched Trading the Close yesterday, I gave you live a short trade that I had set before I went on Trading the Close with Tony. That nailed it, and I actually made money on the pullback. We'll talk about that in just a minute. Okay, enough of this, guys. What I want to do now is we're going to do the spin. We had a year of trading view, I believe. So a year of trading view up for grabs. Let's do it right now. And don't forget to email lawton@verifiedinvesting.com if you are the winner. And the winner is, let's see what we got here, Robin Hood, there you go. Robin Hood, very cool. So congratulations, Robin Hood. Reach out to Lawton at verifiedinvesting.com. He'll get you all set up with a year of trading view on them. They're one of our best sponsors, along with many of these other ones, NordVPN, iTrust, as well as Lux Algo, and many others. So congratulations, and thank you guys, all the sponsors, for donating what you guys have. All right, so what we're going to do now, guys, is we're going to go right into the charts and take a look. So SMCI, this is the chart pre-market of SMCI. This, if you watched Trading the Close yesterday, it was one of the most amazing shows because we watched this volatility here. And the volatility on SMCI was incredible. It initially dropped, then it surged up to $940. It then dropped to $720, and then it's kind of petered out to $776 currently. All right, now one of the amazing things, and I was talking about this on Trading the Close yesterday, is that we had a head and shoulders pattern. Now I'm going to draw the head and shoulders over this chart because I don't want to kind of take away what I have here. But basically what we had here was a very classic head and shoulders pattern. I believe, get my drawing tool up here. I believe that we had shoulder, head, and shoulder, and then breakdown right here. But the point here, again, is that when we retraced up, there was a neckline right through here, okay? We retraced right up to $940, and that was the level of the retrace to the neckline of the head and shoulders. That happened after hours. You could see the frustration. I even wrote something on the screen that I can't repeat in words. But the point being is that the price went there, and then it began to collapse, and it literally went from $940 down to $720 there. So pretty wild stuff. Now, looking at this chart, what do we have? You guys know this. We have a classic channel. Channels are becoming more and more important to me in swing trading and day trading. All right, so number one, we have this high right here of this big candle, and then this low, and this low, and then this high, and this high, and this high. So you're very clear, and this is a perfect parallel, meaning I'm using the parallel channel drawer in TradingView. But what does this tell me about a downside potential target? Over the next week or two, if this thing falls down into this lower level down here, which is right around $600, that might be an opportunity for me as a swing trader. Now, as a long-term investor, honestly, I think it's going lower. I do. So, it's not something that, for me at least, I'm going to buy and hold for a long period of time, but I might be interested as a swing trade right at that 600-ish level based on this channel, and obviously that would be a pretty lofty sell-off or hefty sell-off on the chart. All right, AMD. Let's flip over to AMD. Then we'll get into some of the other things, the other earnings as well. We did have, by the way, MasterCard reported today. I'll touch base on MasterCard in just a minute because I do think, again, it could be a warning about the consumer. Last I checked, the stock was down. All right, here's your chart on Advanced Micro. Look at that drop over there on the pre-market and after-hours data yesterday. It has recovered a little bit off of its lows. So we did see it as low as about 144. It's back to almost 150 here. You are seeing a small bid coming into the market as investors are buying the dip on some of these names. However, what do we have here? These are my big levels. All right, I have the first level and the second level. They're very close together. These are two levels that I'm going to be watching over the next little bit of time. The first level, again, it comes in right here. There's a little flat top here, right through here. This is more a day trading level for me. So if it pierced 140, 140 would be my day trading potential level for a quick scalp or day trade. Now, if we look at the next level, and I want to do this real quick, I want to erase this first one because now we're moving away from the day trades. The swing trade level, where I would be semi-interested, is a much firmer level. Notice how the swing trade level goes back further. The further a trend line goes back, the more powerful it is in terms of its support levels. So what we're doing here is we're basically taking this high here, and you could even make a case that it's right in the same range, and we draw that through, and look at how price got above, it came back, then it went up, then it came back, then it finally went on this crazy run. So doesn't it make sense that it wants to eventually come back to that level? So we're talking about, I believe this level's around 134 to 132 on the chart. So we'll move down to 134 to 132. I might play this as a swing trade. Okay, so again, there's your kind of level to watch for. Now, yes, the chart is decently away, but the way these markets move and the way these semiconductors move, this could be hit in a day or two. It really could if the markets collapse. Like if the Fed crushes the market today, by the way, I'm not I'll go into that in just a second on my Fed predictions, but I'm not necessarily in that camp that they're going to totally crush the market today. I think the market's factoring in a very hawkish Fed. I think they'll be hawkish. I'm not sure if they're going to be as hawkish as the market expects. Okay, so there's your AMD level. Now we got to look at Starbucks, guys. Now Starbucks is astounding because like I said, historically you don't see Starbucks move 10% on earnings or greater, and that's where we are right now. Look at the chart. It was just kind of going along the last few days, and then look at the drop that we've seen. If we zoom in on this, you can see a level that I've been watching. It's right below 178. Now, again, the fact that we're trading along here, it's not a day tradable level anymore. All right, once you kind of violate it like this, I don't want it anymore. I don't want it, right? It's not that great. So that's the first thing. But either way, it is trying to hold this support level. We'll have to see how it goes. But again, 178, 177, there is a significant amount of support on Starbucks. Going to the daily chart, where are we looking at this daily? And by the way, where is that 177 to 178 level coming from? Look at this. I mean, this is pretty wild. In fact, I have to go to my weekly chart. All right, look at this. So again, the reason why I isolated down that 177 and 178 levels because the trend line goes back to 2009. Now, my only issue here is that the methodology that I teach says that the more times you hit a level, the more you have a potential of breaking down. Well, number one, I mean, how many times did we hit over here, right? I mean, so many times. Then we went away from it, right? And then we came back again, and then we came back again, and then we came back again, and then we came back here, and we're now trading right into it again. And I'm nervous that it's going to break down, to be honest. The way it's acting, the way the negativity is on this could go a little bit lower. Now, where would be the next level? Well, first and foremost, what kind of pattern do you guys see here? Do you guys see a pattern? All right, let's do a little test case. So if you can get this pattern, I give you a gold star. Obviously, I won't know, but if you can get this pattern, then you're bonus for you. The pattern here, whoops, there we go. The pattern here is pretty crystal clear. It is a shoulder, head, and shoulder, okay? So we now have a head and shoulders, which is a bearish pattern if it triggers the neckline. Now the neckline, check this out, guys. So where is the neckline? Because the neckline is not this orange line. The neckline needs to go through this COVID low right here and up. So let's do that right now, and let's break it down. So I'm going to erase this first line, and we're going to put in the neckline of the head and shoulders to give us a break point. And there's no doubt it's broken, but look at this. Is this crazy or what? So what you're seeing here is that if you put in your proper neckline, right, and we put that in, you literally get this low here to this low, and you got the exact low going into earnings, which means based on today's gap down, this baby is triggered, and that is not good either. All right, so again, head and shoulders triggered. I could do the measurements, but it would be so nasty that you guys wouldn't even want to know the price target. If this actually did play out, you would take that amount of distance, which is from $125 down to, let's say, $70. So that's a $55 move. And again, take this with a grain of salt. When these targets are so close, number one, we literally, if we go into a depression, yes, this would hit. That's fair. But you would basically take away $50 here, $55 here, and you would take that down, right? And, basically give you a $30, $35 price target on this chart. Now, I don't trade that way because that's a very long-term view. But what I do is I say, okay, well, what could be my secondary level here? And what I would do is as I zoom out, I take a trend line, and we put the trend lines through those same lows, but instead of going through these upper lows, I take it through the COVID low. Now we're talking about a potential swing trade level. Do you guys see that? So now what we're doing is we're taking this low, same low that we started that previous one at, these lows here, right along here, but instead we're connecting it through the absolute low of COVID, and it gives us about a $68 to $69 price target. So there would be a level where I would consider swing trading it. I would also try to find other factors that give me a secondary factor at that level. That always increases your probabilities for success, okay? All right, Pinterest real quick, guys. Pinterest, a nice move on earnings. This was the level yesterday I had on trading the close. I got a short off right up here, and boom, I think I took about, I don't know, $1.50 on it or something like that. It wasn't anything too huge, but on 2,500 shares, it was a nice little payday for me in the after hours there. And again, I wasn't even at my computer. I put that order out ahead of time because, again, it was like, okay, well, if this has the craziest move up, maybe it'll go here, and it did, and then it would pull back, and that's exactly what we got. All right, CVS, guys, getting crushed. And again, you could look at Walgreens, CVS, they're in trouble, right? And this stock, again, is absolutely annihilated in terms of a level real quick here. If we look at this, what are we looking at? I got to zoom out a long way here. I have a couple levels isolated down. We're looking at 56 to 52. 56 is first level, 52 is second level. This pivot low to this pivot low. Those would be my day tradable levels. I'm not interested in, at this point today, on a swing trade. I need to let the dust settle. There's something called a 3-day rule, which is when you have these kind of crazier moves, you don't mess around with it for 3 days because there's going to be margin call selling, institution selling, lots of selling going on that can drive it lower for a few days. I did mention MasterCard just because, again, this one has to do with the consumers. The stock is down on the day, but it is recovering a little bit. It's not down a huge amount, but obviously we are seeing a little bit of a recovery. But any weakness in these stocks, any sort of weakness in the consumer is going to get seen in things like MasterCard, American Express, and these other names. Starbucks, another good one in my opinion, because people are so addicted to their Starbucks. Okay, on that note, guys, what we're going to do, we're going to spin the wheel. Let's do that real quick here. So as we bring it over here, we're going to spin to see what tomorrow's winner will be. And again, folks, as always, what I want you to do is share this stream, this show with your friends, and post it on X, post it on Facebook, wherever you want to post it to your friends. That enters you in. Just let us know. And today, look at that, the 1-minute scalpel, Dr. B's course. This is an incredible course, folks. People that have taken this course have said, holy cow, the amount of money I can make now based on using the 1-minute chart and what I'm seeing on the 1-minute chart is incredible. And I myself never traded the 1 minute until Dr. B came in this office and started trading with me, and now I look at it as well. It's that powerful. So congratulations to tomorrow's winner. Don't forget, share this again, and you need to post below so you can be entered. Tell us where you share it, because when we verify that you've won, we're going to go and look and see, did he share it on X? Did she share it on X? Did she share it on Facebook? Whatever it is, we want to see it, and we want to see and make sure that this is getting to as many people as possible. All right, guys, we are going to take a 30-second quick break to thank Lux Algo. They are a sponsor here. I love Lux Algo. I'm working with them on multiple projects. And again, you have to check them out. The link is below in the description. They are rock stars, guys. Seriously, very beneficial if you're a data-driven trader like myself. So take it away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back here. Now, first of all, we're going to look at Bitcoin. Bitcoin is in free fall, right? We were coming down to that first level, and I gave you guys this game plan perfectly, right? We knew this was good support. We knew this here, it broke, it hit support here, then it retraced to resistance, then support. As of now, it has broken that key level. So be aware that this has now broken the key level of support, and it's now vulnerable. This chart is vulnerable to going to 53 to 52,000, maybe even as low as 49,000. Now, a couple things that I'm going to watch. So I want to show you this, right? So there's some factor that I'm watching here on the charts. And if we do this and we just kind of do a parallel, and I think I showed you this yesterday, if we take a parallel here to here and we drop it down, you do have a parallel that I'm still focused on. So there is a small amount of hope for Bitcoin. Sorry, I didn't let you guys see that, but there's your parallel. And if by chance Bitcoin can recover and get back above this line here at around 59,000, then you might be able to say, okay, it's holding the downsloping parallel. But again, the vulnerability of Bitcoin is increasing exponentially right now as it's breaking these key levels. And again, by the way, guys, I did cover my Ethereum short today. So again, I have one open position, a Bitcoin short, guys, which we're basically flat on right now. All of my other trades closed out. Incredible gains for members in Smart Money Crypto. So again, congratulations to those of you that are members on the Ethereum win today. And again, I only have one open position now. A lot of people say, oh, there's so many open. No, there's not. There's literally one open position. It's the beauty of it. You can see every other trade I've taken since the start of the service on the track record at verifiedinvesting.com. Verified, baby. All right, so here we have it right here. There's your potential breakdown. Can Bitcoin recover? My guess is if it's going to recover, it's going to be on the Federal Reserve later today. So watching that very closely. Now let's quickly look at Ethereum. Why did Gareth decide to get out today? Why not let this thing go lower? Well, it was a risk-reward assessment, right? So what we see here is that I had two trend lines that were converging and a double bottom. So we have this trend line here, which came across right to here, and we pierced it. And then we had this upsloping trend line from here to here to here, and right to here, and it also kissed price here. And so is there a chance that Ethereum can go lower? Like, heck yeah, there is. Heck yeah. But as a trader and an investor, you have to make a determination on what is the chance of you making a lot more money versus what is the chance of you giving up your gains. And for me, at least, I'm generally a little bit more of a conservative investor and trader. I said, you know what? We've had a move down from 3,300 and change down to 2,800 and change, which is where we got out. I took my gains. I said, thank you very much, members. Congratulations on the win. Another win here. Let's move on. Now, if it flushes, now this is the kicker, right? Some people would say, well, if you're out of the short, wouldn't you go long? The answer is no, because I have to be even more secure. I have to be more secure. So now what I'm going to look for is if Ethereum pushes down to this level here, right, somewhere around 2,600, then I might be interested in a long. I will reevaluate in real time for members and guide them, obviously. But there's a place where you cover your short because the risk reward is but at the same time, you're not going long. Like, just because you're covering a short doesn't mean you love it on the long side. It just means the risk reward is now not the greatest to continue to hold that, and you want to pocket some profits. Really important understanding there. All right, guys. Man, I wish I had longer time to go on these. Gold is getting a small bounce. The gold move, honestly, doesn't even matter today, right now, because on the Fed today, that's what's going to matter, 2 o'clock. And by the way, don't forget, guys, I will be live here with Dr. B trading the Fed decision, analyzing the Fed decision, 1:50 p.m. Eastern time today, going into the 2 o'clock announcement. We'll be live for about an hour, so make sure to check back. You could watch it just on the homepage, website, verifiedinvesting.com. Silver, same thing, nothing going on there. Oil's a bigger deal here, guys. Oil may be breaking down. I talked about this yesterday. Again, this was a confirmed support. It got its bounce. Now it looks like it might be violating this level. We need to see if it confirms below. If it confirms below, a failed breakout, watch out below. Failed breakouts. When you have a breakout, like when you go like this and it fails, it's like that oftentimes. So we could be on the verge of a big move down in oil here. I've got to watch very closely. I'll keep you guys updated in the game plan. But this is price action is also, by the way, a little bit of a head and shoulders right here, right? So we have a little bit of a potential head and shoulders as well with a target of $74 down here on the chart. Natural gas real quick, guys. Nat gas again, really disappointing. Every time it pops up and makes a new high. I mean, at least it's making new highs. But man, oh man, I'll tell you, it's just like pulling teeth to get this thing to have a multiple move to the upside. Now, again, it's still in an upsloping move, but I still think it's got to get there. Yesterday, again, backed off a little bit. Nothing new to report on that. And lastly, coffee, guys. I'll just cover a commodity here today. I have my commodity service, Smart Money Commodities. We cover this almost every day. Major support on coffee here. If it comes back in here, which it should, that's a retrace to the scene of the crime, basically $200. That is a money spot, in my opinion, for a potential long on coffee. All right, guys, I got to get to my trading room. Lots to trade today, but always, guys, it is a pleasure to guide you guys in the action here and get you all set for the trading day. I love your comments. Don't forget to share this to your friends, your family. Post to us where you've shared it. Let us verify. Make sure you get entered in to win the 1-minute scalpel. Thank you again. Watch me at 1:50 p.m. Eastern time today, guys. It's going to be a big event with the Fed. Have a good one. Take care.